Hey guys, welcome back. Today we will talk about inflation and why the Federal Reserve is putting everybody in danger. Okay guys, please take a look at this chart. $20.9 trillion are printed in M2 money supply. We should also take a look at Apple's valuation. It hit an all-time high of $2.7 trillion in market cap yesterday. So everything seems like an inflating balloon. So are we in a similar situation as the 2000.com crash? Well, to me, the answer is not so simple. And let me explain why. But before I begin, do help me out by liking this video. Thank you. Okay guys, so I think we are living in a dangerous era. Cash is no more king, companies are overvalued. Jerome Powell gets a second term, 1.75 trillion social spending bill just got passed.
On this vote, the yeas are 220, the nays are 213. The Build Back Better bill is passed.
So this is the US debt clock. The US national debt is edging close to $29 trillion. We will get back to this clock later. Well, to keep the economy running smoothly, they keep interest rates low and print a lot of money to make money velocity fast so that there's liquidity for all businesses and individuals. However, the faster the money flows, the faster price of all products and services increase. Inflation is sometimes psychological. If everyone believes the US dollar have value, they will save and keep the dollar, and this will slow down money velocity. However, if consumer thinks that price of everything will rise quickly and that the dollar has no value, they will quickly spend their money immediately, especially if they think that the dollar is worth more than today than tomorrow. This will then become a vicious cycle and prices will keep increasing over time. This is caused by fast money velocity. You can Google to find out more about hyperinflation in Germany during 1921. If there is hyperinflation going on, the middle class and the poor will destabilize the society because they're the most vulnerable group. So imagine paying $10 for eggs, paying your entire salary just for rent. So this will not end well if nothing is done. There might be riots, crimes, etc. So this is a picture of Venezuela inflation rate versus other currencies in this year alone. To prevent public unrest, you have to slow down money velocity or slow down the speed of how money flows. But how do you slow down money velocity with so much money printed in the system? So one way to do it is to raise interest rates. When you raise interest rates, borrowing becomes more expensive because of high interest environment. High interest environment will cause lesser borrowing. When people borrow lesser, you reduce the debt and credit in the system, and since credit is a form of money, there will be lesser amount of money flowing through the economic system. Hence you slow down money velocity and inflation. People will be incentivized to save the dollar too. Hence to slow down money velocity, you can increase interest rates. However, the US national debt is $29 trillion. If you just increase interest rates by 1%, it will be $290 billion worth of interest to be paid to the national debt. These $290 billion can be used for social spending programs and infrastructure building, etc. Therefore, I think the Federal Reserve is in a checkmate spot. If they continue keeping the interest rates low and continue printing money, there will be fast money velocity and the dangers of hyperinflation. This will cause the whole system to crumble. If they raise interest rates, they will end up paying a lot of interest. So what they're doing now is just basically kicking the can down the road and see where we head to next. If they continue to print money, money will flow to the bond market, to the stock market and to real estate, further inflating the assets. What can cause a major correction is increasing interest rates, cutting down over leverage margin in stock market, slowing down business growth, etc. So are we in a bubble? The answer is both yes and no. With so much money in the system, it has to go somewhere. People are willing to pay for high PE ratio on income generating asset. And I'm in a dilemma. If I take profits off my stocks, I'll be sitting on a heavy pile of cash. With nowhere to allocate, cash is trash. Holding cash is also one of the dumbest idea. I can also short the market, but I'm doing it in the middle of a greatest bull run. I might be able to pull it off, but it is speculative, and I don't want to get a chance of insolvency. So what I'm thinking now is to transition more from a wealth accumulation phase to wealth preservation. I will do so by maybe hedging my position. For example, I'm still long the equities, but I will short overvalued stocks like Rivian, etc. I'm also thinking of taking some profits off the table and using the cash to buy up Ethereum, Bitcoin and Nano because they are sort of finite. So this is just me thinking out loud. What are your thoughts? Feel free to share in the comment section below. I do read them. If you learned something from this video, don't forget to subscribe to my channel and ring the bell button. I'll see you next week.